Did you know the foreign exchange market is bigger than the stock market, crypto, and gold combined? Every single day, more than $7 trillion move through Forex trading. Yet most beginners have no idea how it really works. If you've ever wondered what Forex actually is, how people trade currencies, and why it's such a massive market, then stay with me. In just the next 10 minutes, I'll break it all down for you, step by step. What is Forex? Forex, short for foreign exchange, is the global marketplace where currencies are bought and sold. Unlike the stock market, Forex doesn't have a central exchange. Instead, it runs 24 hours a day, 5 days a week, across financial hubs like London, New York, and Tokyo. At its core, Forex is simple. You are exchanging one currency for another, hoping to profit from changes in their value. For example, if you believe the euro will rise against the US dollar, you can buy the EUR-USD pair. If it rises, you make a profit. If it falls, you take a loss. Remember, this video is for educational purposes only. Trading always involves risk, and you should never invest money you can't afford to lose. Why people trade Forex? So why do millions of people around the world trade Forex? First, it's one of the most accessible markets. You only need an internet connection and a broker account to start. Second, Forex is highly liquid, meaning there are always buyers and sellers ready, no matter the time of day. Third, traders like the flexibility. You can start small, practice with a demo account, or trade part-time alongside your job. But here's the truth. Forex is not a guaranteed way to get rich. It carries high risks, and without the right education, most beginners end up losing money. Currency pairs explained. To trade Forex, you need to understand currency pairs. A currency is always traded against another, forming a pair like EUR-USD. The first currency is called the base currency, and the second is the quote currency. If EUR-USD is at 1.10 comma, it means 1 euro is worth 1.10 US dollars. Pairs are divided into 3 groups. Major pairs like EUR-USD or GBP-USD, which involve the US dollar and are the most traded. Minor pairs, which don't include the dollar, like EUR-GBP. And exotic pairs, like USD-TRI, which involve currencies from emerging markets. Beginners usually stick with major pairs because they are less volatile and more predictable. Pips, lots, and leverage. Now let's talk about 3 terms you'll hear everywhere in Forex: pips, lots, and leverage. A pip is the smallest price movement a currency pair can make, usually 0.0001 for most pairs. Lots represent the size of your trade. A micro lot is 1,000 units, a mini lot is 10,000, and a standard lot is 100,000. Finally, leverage is the ability to control a large position with a smaller amount of money. For example, with 100 leverage, $100 can control $10,000 worth of currency. While this sounds exciting, it's also dangerous. Leverage magnifies both profits and losses. That's why beginners should always use low leverage and practice with a demo account first. How Forex trading works. Step by step. So how does trading actually happen? Here's a simple step-by-step process. Step 1. Choose a reliable broker and open an account. Always check reviews and regulations before trusting any platform. Step 2. Download a trading platform like MetaTrader 4 or MetaTrader 5. Step 3. Select a currency pair you want to trade. Step 4. Decide whether you believe the base currency will rise or fall. If you expect it to rise, you go long, meaning you buy. If you expect it to fall, you go short, meaning you sell. Step 5. Manage your risk with tools like stop-loss orders. These automatically close your trade if the market moves against you, preventing bigger losses. Risks and rewards. Every opportunity comes with risk. The reward of Forex trading is the chance to profit from daily price movements in the largest financial market in the world. But the risks are equally high. Many beginners lose money because they use too much leverage, trade emotionally, or don't stick to a strategy. The key to survival is education, discipline, and risk management. Remember, your first goal as a new trader should not be making a fortune, but protecting your capital and learning the process step by step. So, to sum it up, Forex is the global exchange of currencies, the largest market on Earth, open 24 hours a day. It's full of opportunities, but also risks. If you're serious about learning, start with a demo account. Trade small and focus on education first. Subscribe to Pip My Trade for more beginner-friendly Forex guides.